Luke, thanks so much for joining us on Wall Street Unplugged.
Absolutely. Thank you for having me. Happy to be here.
So, exciting times for you. Working at Benzinga. You've been there for 9 years. You are now director of operations, and also, you host Power Hour, which I've been on the past few weeks. I'm going to be on the next, I think, 7 or 8 weeks. And, now it's nice to get you on the other side of the microphone. But talk about that journey, because you've been there for such a long time and see it develop and everything. Director of operations. That's really cool, man.
Yeah. So it's been quite a wild ride. The business has adapted significantly over the past 9 years. The way that I got here is by happenstance. I saw that Benzinga was based out of Michigan, which is where I grew up. Have been a stock market junkie for quite a while. I think I opened my first brokerage account when I was 15 years old, and my dad had to walk me into a Scottrade branch and fill out all the papers in his name, as I wasn't even old enough. I saved up, lawn mowing money, whatever the account minimum was then, $2,500 or something like that. But I've been a stock market junkie for quite a while. Saw that Benzinga was in the same area, just reached out to say hi. And basically got a message back from Jason, the founder of the company, saying, "Hey, we need more people to write articles. Do you want to work here for free?" And I said, "Well, that sounds awesome. I get to just write about stocks and people will read it. All right, I'm down to do that. Right, write up my stock ideas, my pitches, learn how to cover news, that sort of thing." So that's how the journey began. And I mean, today we are the most widely used news source for North American brokerages. So pretty much every major brokerage in North America carries Benzinga content, makes it available to their users. We get 20 million people a month to Benzinga.com proper, to our site. We've built a ton of subscription products over the years, like our Benzinga Pro. And it's definitely been a hell of a journey over those 9 years.
No, that's awesome. And Jason, I worked with at thestreet.com, and we both had a lot of respect for each other. I just interviewed him on a podcast a couple months ago. Just a great guy, and just to see, what he's done with this company is incredible. And that's one of the things I want to talk to you about, because the Wall Street Bets thing, right? Everybody knows about it now. I think it's over 10 million strong now. But a lot of that started right on your website with Citron. Go into that a little bit, because, and also, are you surprised at how many young investors are coming into the market and coming into this platform? Because even when I'm on your platform, it's really cool. You do a great job hosting it, but it seems like just the way it's set up, and I could see so many young investors. It's just simple to use. People understand. You're shouting out lots of ideas. You're making it exciting. You're talented people who are really, really excited. And that growth's amazing. But just, I guess we could talk about that. It's awesome.
Yeah, so the GameStop and Citron moment was one of those, oh shit, like we made it type moments. In that, when Citron was coming out with its short thesis and sort of doing that first talk about why it's shorting GameStop, Benzinga was a platform that they said, "Hey, I'll come on and make this short case." They'd published some materials before, but I think it was the first time that Andrew Left was coming on video saying, "I'll make this short case to the individual investor via Benzinga." And the reason why that was like a we made it type moment is because he looks at Benzinga as this is the mechanism to get in touch with the retail investor. It's not through a CNBC, it's not through a Yahoo Finance. It's Benzinga is the platform to do it. So I mean that was a really neat moment, but it's a culmination of what we've been building towards. Our mission has always been about, we want to make financial information easier to consume. We want to strip out jargon. We're not going to make our readers read a 4,000 word story just to find out that Tesla announced a buyback, right? We want to get them to the point. We want to make things actionable. We've always written for mobile first. We've always tried to simplify, but let users get in and out. And so we're proud to say that our readership is younger than, or skews younger than any other financial media site out there. In that more than 70% of our readers on Benzinga.com are age 44 and below. More than 70%. Almost every other financial media website out there, you're going to see the exact opposite, where 70, 80, 90% of their visitors are age 45 and above. which makes sense because that's historically when people have gotten more involved in the market. They've taken more care about their finances as they're getting closer to retirement. But I mean, the paradigm shift has been happening for many years. COVID, sort of lit the fire of what was already going on and showing people, hey, markets are way more accessible than you think. And we've been there for the individual investor for that whole journey.
And just to show why that was a revolutionary moment, I mean, Andrew left. I met him several times, know him. He spoke at some of the conferences at a previous company I was at. And a great short seller, right? I think we all agree with that. And he came on the platform. Yes. I think was it GameStop? Great. Was it GameStop that he? So it was GameStop.
Yeah,
saying,
it was
hey,
GameStop.
I'm going to explain to everybody why I'm shorting this. Of course, he has that massive short position before and comes on all the platforms. But that's when, a lot of people, Wall Street Bets, kind of like took the other side and blew it out of the water. I think just said that it resulted in your systems going down. I think he said. I'm not too sure if that's factual or not, but and also resulted in Citron 20 years of doing short research of not doing that anymore, saying we can't do this anymore. I mean, it's just when you have a market and a group like that could really trigger short sells. I mean, that's a revolutionary change, right? That's like a fundamental change in the markets. When you talk about one of the best at what he does is changing his business model because what's going on and starting your platform, and that's pretty amazing stuff, man. It's pretty cool.
Yeah, absolutely. I mean, yes, he's definitely, well respected. Icon of Wall Street. And again, the fact that he looks us as, hey, this is a vehicle that I have to make my case about something, it was pretty neat for us.
So I can tell you, I've been hosting a podcast, believe it or not, 14 years. Holy cow, that's how old I am. Very, very old. Okay. But everyone kind of has a podcast and stuff like that. But people will always ask me, what's the value in it? And it allowed me to create this amazing company, right? Where we have tons of subscribers now, generating millions in revenue. But the most important aspect is I never saw it free for me because I am interviewing brilliant people all the time. And I see the list of guests that you're interviewing. How do you take that in? Because, these are people that are brilliant and they're sharing their ideas with you. Now you're building your network. How important is that? Because for people out there who do want to start their own podcast or start their own show, you might not make money off the podcast right away. You got to find ways to do it. But the value of that is incredible in terms of the investment ideas and the access and the network, right?
Yeah. The network is huge. Like the way that I think about it is I care a lot about what I have to say. More than anybody else. I care more than anybody else about what I have to say. Our viewers don't care a ton. Right? They care about a lot of the names that they're already familiar with. They care about the ideas that they're already familiar with and want to dig deeper into those names. So building out the network, being able to grab hold of audiences that the people that we're interviewing already have, goes a really long way. And a mistake that I made early into getting started with our show, but it was that I was too laissez-faire going into a lot of these conversations. In that, it'd be, let's say we're interviewing Andrew left. Okay, we know he's got a short position on this, a short position on that. Boom, that's enough to get into the interview. But the audience that he's going to bring in to listen to that segment already know the basic stuff about him. They want to dig into to that level too, right? What hasn't he already publicly talked about? What hasn't he already tweeted about in the past 48 hours? Dig for sort of the meaning behind the statement. And so that's the other big takeaway that I've had is, when you bring the people on, they're carrying an audience that already has that general idea as to what they're talking about. It's my job to try to be smart enough to dig into, what are they really getting at here? What is the message that we need to uncover, et cetera.
And that's the job, right? Because for me with the podcast, it's I do a ton of research on every guest, right? I go to LinkedIn, I look at what they said the last 6 months, I look at their interviews, and I don't want to ask the same shit all the time to them where, that they've answered numerous times. So, and I'll come up with stuff and I try to find something outside the scope of investing that, maybe they make their own tequila or something and that, lights them up at the end of the interview, but it just shows like they have character. It's not just like a robot talking, but just the amount of work that goes in to prepare for every interview is huge. And one of the other things I learned from interviewing people so long is listening, right? So sometimes talking is bad, right? So a lot of times when I see it on financial media channels, on TV is, these guys are asking and they have a list of questions, like 10 different questions. And for me, when I ask a question, if something goes like in a direction I think is very, very cool, I want to learn more about it, the script is over. I'll have a couple of questions I want to ask where, I see people ask a question and you'll see them just looking, not listening to their guests. And I'm like, man, listen to these people, let them talk. Because when you're going to learn a lot and it's going to lead to a great conversation where we might touch up on something like now, right? We're supposed to go over ideas and stuff. And now, I find this fascinating, just learning of, how you built your personal brand on Benzinga and young investors like Andrew left, and going there. It's the interview just takes a turn depending on where we're going with it by listening. But it really is cool, man. I hope you continue to do it. You're doing a great job. Now, enough of being nice, because every time I'm on your show, you put my feet to the fire. Ideas.
I
ideas.
do.
So I'm going to do the same for you. I gave you, I think, 3. Hopefully you can give us 3, if not 2, whatever you can give us. But what are some of the things that you're looking at? And like I said, I know you're a stock junkie. I know you do a lot of research and homework and stuff like that. So I'm looking forward to hearing some of these picks, man.
All right, so let's dive into them. I'm going to pull out the notepad. I've got a handful that I think that we can get into. All right, let's start with ticker PRTS, carparts.com. It's one that I've talked about quite a bit. Background on the business is basically they are the online car part reseller. Okay, so if you're thinking, you need a new headlamp or, whatever piece of your vehicle that you need, carparts.com has, all the inventory to be able to provide that. Couple reasons why I think this stock is interesting. On the story side of things, only 3% of car parts are sold online. Right, we're in a market where 97% are still sold retail via service. It makes sense that a lot of it is folks take their cars in somewhere to get service, and then they're buying the parts from whoever's doing that service. But again, you still have a ton of individuals who are going to an O'Reilly's and 2 places like that, purchasing in store. So much so that only 3% is purchased online. So I think that the industry is good. The other thing that we have going for us is that new vehicle inventories are at all-time lows. New car prices are high. People are going to hold on to used cars long. They're going to need more parts, right? It's again speaking towards the industry. The industry is good. The reason why I like this stock in particular is that the market doesn't like it. It's one of those stocks that truly is an internet e-com play, but doesn't get treated like one. Like if we look at a price to sales ratio on this stock, it's I believe 1.6. So stock's trading at literally 1.6 times price to sales. Let's say the S&P 500 average is 4, and then annual revenue growth for carparts.com is 90%. Right, they guided for something like 70% year-over-year revenue growth. They blew it out of the water. They hit 90. The market still is only treating the stock with a 1.6 times price to sales ratio. They have cash on the balance sheet, so we don't have any sort of offering risk. They're building distribution centers. They're launching marketing campaigns. And so I think that the industry is right. I think the company is right. I think the valuation is right. So there's my first one, carparts.com, PRTS.
It's interesting. They have.
What do you think of that one?
Covering it. Yeah, four. I hate. I'm shorting it. No, I'm kidding. There's 4. There's 4 analysts that cover it here. You got target price $24.25. Which is much higher than $18. So, yeah. I mean, they all have buy ratings on the stock, but it makes sense to me because when I look, you say 3% is online, but I'm surprised it's not more because yes, people go to and they'll see. They're bringing that car, but there's a lot of companies that make brake pads. A lot of companies that make a lot of different things. So you can go in and sometimes they don't have that, or you could price and what you're getting, right? So you go in there and you're like, all right, maybe I want to buy something else and go on the internet. It's going to be cheaper, right? So I'm surprised that it's only 3%. Yep. That's an amazing number. It just shows how much growth is there. I like it. I like that idea. I think that there's huge growth there. I'm very familiar, dude, with the car cycle. I feel like I know a ton about it. I know why the autos, I mean, they have a different supply chain system, which is real to the market, and they were late to the party where everyone else saw the supply chains, getting really messed up and delayed, and they took up all the capacity where, Taiwan Semi, Samsung pretty much make all the semiconductors for everything. And the autos were like, wait a minute, we're seeing demand. They're like, sorry, we're already at 100% capacity. And now they have to build new facilities. So if you go in to buy a new car right now to your specs, I'm talking just your color and a regular model, it's 9 months before you get it. So, that's why you see
crazy, right? I mean, it's insane.
Yeah, it is insane. So, yeah, I love this pick, man. It's pretty cool. All right, let's keep rolling. Go ahead.
All right. Shall we keep it on autos? I am in Detroit, Michigan. Maybe a little bit of a bias. All right, but I'm going to throw one out that I've been in for quite a while, actually. But since January, I'm still in it, and I'm selling calls against the long position to lower the cost basis. But it's going to be Ford Motor, ticker F. I think that there's a little bit of a fundamental story to be made for Ford in that the stock is still relatively cheap. It's had a really nice run, but it's still relatively cheap. If we look at an EV to EBITDA ratio, I think price to sales is really hard for the autos because they have their financing arms. But if we look at like an EV to EBITDA ratio, the stock's still only trading at 8. That's significantly lower than if we want to take an S&P 500 average. And then if we want to look at automakers in particular, whether we want to look at our Teslas, it looks really cheap. But if we want to look at our more traditional automakers, which are a better comp, like a Toyota and a General Motors, valuation still has a little bit of room to come up. The reason why I think this one is still interesting at this point is Ford has proved to us this year that they are a PR machine. We see what I call the EV energy flowing into stocks, right? When we were seeing NIO rip and Tesla rip and all these EV stocks just start going, Ford came out and said to the market, hey guys, we're about to spend a ton of money on advertising an EV platform that we're rolling out. They absolutely haven't disappointed this year. They've been a PR machine talking about vehicles they're launching a year from now, 2 years from now, 3 years from now. They are going to have products coming online in Q3. So we're going to have new EV products on the marketplace for them. And when those hit, I'm expecting Ford to drop a ton of money on marketing and advertising for their EV products. So again, I said I'm selling calls against the stock. If you look at the chart, it's definitely not beautiful. So I have an underlying long position in the stock. I've been selling calls against it for like the past 2 months and just, working that cost basis down 15 cents a week, basically, which doesn't sound like a ton, but it adds up. I maybe lowered my cost basis from an 8 to a 7 over the past 2 months. But again, I like it for a longer term swing trade. I want to see them get that EV marketing machine, PR machine rolling, which they've already showed us they can do. And let's see if that can drive some more energy back into the stock.
Yeah. So Ford I'm very familiar with, and the EV portfolio, I guess is surprising to some, but going to Consumer Electronics Show, I always do boots on the ground research. I like going to conferences. I've been going there for like 10 years. The last 5 years, awesome. Ford has spent billions getting into this industry, and just displaying their cars, displaying technology, being able to talk to the people on the floor, real employees, not the CEOs always going to tell you how great his company is. But it was amazing to see, them getting into this. Now, with that said, for me being in the market for a car and looking at Ford and GM, I just feel like the production, if you can get past these next 2 quarters, it's going to be fine. But like you said, they are a PR machine because they are talking their EV portfolio like crazy, which won't be available until 2030, which is a very long time away, but they're talking how great it is. And I get it and it's fine, but yes. You're going to see massive production cuts here. That's the only thing that worries me over the next 2 quarters, but you holding it long term. I like what you're doing in terms of the option strategy, lowering your cost basis. But that's the only thing that worries me because I think they just reported really bad numbers. I think they're going to report because they're not getting any production. They're idling plants. So if they could go through this and people don't care, this thing's going to go to 20. So it's going to be interesting to see. But
here's my one piece of solace. Mm-hmm. I was just going to say my one piece of solace with this one is that the company did guide that Q2 is going to be the worst part of the year. They said the Q2 is going to suck. They told us that in Q1 it sucked. Mm-hmm. And they said, that's the trough. I mean, hopefully they had enough foresight to be able to foresee what the rest of the year is going to look like. I think that's yet to be determined, but that's the little bit of solace that I have.
And the cars that they're getting, which are very few on a lot, are selling above sticker. I had to pay above sticker, no incentives. And if I didn't pay for that, the guy behind me was buying it. I'm not kidding you. There was 3 that went on a lot. Okay. It was at Denali's, and 3 of them came in. I got lucky, and I had to buy it to that spec. And they were like, "Let me know which one you want, because the other 2 are gone." We got 3 people, and there was like 5 people there, and everyone. You need a car, right? If your lease is up, and there's hardly any cars to buy because everyone's having supply issues. But they said that there's usually 350 new cars on one of the lots, and there was 20. And that was common for a lot of these things. So once this thing reverses these, and so Ford might make up the difference in terms of, being able to charge numerous, huge prices, much higher prices, but it'll be interesting to see. They got to get those cars in the shops and get that production going. But yeah, I mean, right now, listen, it's held up surprisingly through that quarter, which I thought was weak. But if they hold up through here, I think, this thing could really, really start going for you. So real quick, do you have one more, or are you done there? And if you're done, that's perfectly fine, but I'm going to try to squeeze one more out of you.
No, we'll hit one more. We'll go with more of a spec play. How's that? I'm going to throw this one out. Another one I've talked about a ton. Voyager Digital. Primary listing is in Canada with ticker VYGR. Also OTC listed, ticker VYGVF on OTC markets. In short for this one, don't want to take up too long, but the in short for this one is that it's a crypto brokerage rather than exchange, which means they offer crypto commission-free crypto trading. Right? If you're thinking about a Coinbase, you have to pay like a 1% fee in order to transact on the platform. Voyager is one of the few, them and Robinhood, that are actually allowing commission-free crypto trading. The way that Voyager makes money is that if they fill your order better than they quoted it for you, they share in that savings. So if they quote you Bitcoin at 30,000, they fill it for 29,000. There's $1,000 of savings. You guys split that money. The reason why I think this one is interesting is that it's gotten hit with all the other Bitcoin stocks. Like I'm thinking about the Bitcoin miners in particular, like your Riots and your Maras. But the thing that's beautiful about Voyager is that they make money on both sides. As long as there's as there's transactions that are happening, users are trading, they're making money. It's not like they're dependent on the price of Bitcoin to increase. They also offer 60 altcoins on their platform. So let's say Bitcoin falls out of favor, but then we see Dogecoin start going crazy again. They benefit from that transaction as well. Do I think that user growth, new users entering the crypto market and joining the platform will slow down? Yes. But the stock price and the estimates have gotten washed out as Bitcoin's dropped off. I know from our readership on Benzinga.com, there is still a massive amount of people who care about crypto, are reading about crypto, involved with crypto and altcoins every single day, even though the price is way off of its highs. And so for that reason, I'm trying to pick a bottom in Voyager. I said this is the more speculative one, the high risk, high reward type play. But Voyager Digital, that is the next one I'm throwing out there.
I wish I had an air horn. If people unfamiliar,
there we go. See,
cool. Why do you do the air horn for? Why do you do the air horn for on Power Hour? Why do you do that for?
Boom. The air horn just lights it up. There nothing drives energy like the air horn. All right.
So the reason why I'm saying that is because my audience is very familiar with this company. So we were very, very fortunate. We recommended it down here at below $1, and we still have it in the portfolio. So we also had it up here and participated in the move down, but we're still up a lot. But very familiar with this company and what they're doing, and just amazing. I didn't know that they would split in the difference if they get a better price in brokerage and stuff. And but these guys are right in the middle of it. They're 100% pure play on crypto, right? Just like the Galaxy Digitals and the Marathons and the Riots. So if you're a real believer that. And I think you'd agree with this, right? If Bitcoin's going to 100,000, which we hear all the time, and it doesn't have to happen this year, it could happen 2-3 years. I mean, this company, Marathon, Riot, Galaxy.
Buy them
these
all.
things.
But the reason why I like this one though is that they make it on both sides. Versus like Amara. Amara owns Bitcoin. Your price is pegged to whatever the price of Bitcoin is. Whereas this one, I like that the revenue stream is a little bit more diversified. Of course, Bitcoin goes up. It's good for the whole space.
You're right. I think Mara and also Rye just got a little lucky with the China closure, though, because now that they're not the only game in town, but everyone's struggling. Those guys are locked in, hash rates down. So it is interesting to see how. I love the crypto industry and how much it changes.
Have you looked at CleanSpark?
It's really cool. No, I haven't looked at CleanSpark. See, you got to make me write a name down. I love it.
All right.
Why? What do you know about it?
Check out CLSK. Not in it. Potentially going to be those three that I just talked about. I'm in all three of those. But CleanSpark one potentially getting into in the near term. So the background of the company is that they do microgrids. It's basically it's a SaaS play for small solar energy setups, right? So if you have solar panels at your house, they're running all the SaaS software to optimize energy collection, storage, repurposing back to the main energy grid, etc. That's like their core and their legacy business. They have military contracts to operate these microgrids at military bases. They've moved residential as well and are getting more residential uses. But basically to showcase that they're really, really efficient with energy, they bought Bitcoin miners. And because they create all the energy themselves and maintain all the energy infrastructure themselves, because that's their core business is software plus the hardware for these microgrid systems, they're mining Bitcoin at less than $6,000 per coin. And they don't get a ton of a premium for that at all. They get almost no credit for the revenue of their core business, which has been around for many years and existed as a public company for many years. And then so you got the stock trading at $550 million market cap, and then cash and cash equivalents are something like 300 million. So it's a cheap stock, and I think an interesting way to get some of that crypto mining exposure.
No, I love it. I love it. New idea. I also love the 52-week range, 260 to 42. That's awesome. So it's trading at around 16 right now. But all right, so listen, love the picks, love the ideas. Your audience, any audience, they love those ideas. I love talking about your background, learning more about you, man. I think you're doing a fantastic job. I'm looking forward to Power Hour and being on there tomorrow and every Thursday for the next few weeks. If someone wants to get in touch with you, learn more about you and whatever, if it's through social media or at Benzinga, how can they do that?
Yeah, Twitter, super easy. Luke Jacobi is my handle, Jacobi on Twitter. Reach out, say hi. If you ever have ideas of things we should be doing at Benzinga, things we should be doing better, articles that you think suck, whatever it is, tell me. We've been building this company for 9 years. Like we started this segment. We want to be the best out there. So always looking for ways to improve our business.
Nah, it's awesome stuff. Well, listen, thanks for coming on. Keep kicking ass, man. And I'll see you tomorrow on Power Hour. So I'm glad I was pretty nice. So you gotta be nice to me tomorrow. So it should be pretty cool.
You're pretty nice. And don't worry, I'll have the air horn ready. We'll be smashing that air horn.
I'll have some good ideas for you, man. So listen, thanks so much for coming on. And I'll talk to you soon.
Awesome. Thank you, Frank. Talk soon.